please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Market went to yesterday's low, has taken support there and has moved back into the green. So, as we discussed in the morning, if yesterday's volatility, troubled you, today could be bigger, and you've seen that at least in the first hour of trade. But let's move on to some important topic. Latest reports indicate that order inflows trends for capital goods and infra companies has shown significant improvement, and order value has more than doubled year on year. Mahesh Vyas, MD and CEO of CMIE, who tracks the Indian economy, now joins us. Mahesh, good morning. So, do your numbers corroborate this trend, and is it nationwide or is it restricted to a few states?
Number one, that order books have increased is true. So in December 2017, we have seen a substantial increase in the order books of infrastructure companies, and whether it is in terms of construction orders or machinery orders, there is a pickup in order books of companies in this quarter. But a caveat to that will be that the increase is seen year over year, and December 16 was a particularly bad quarter, sorry. So immediately after demonetization, we saw a drop over there, and that drop kind of continued for 3 more quarters. So we are seeing a recovery. So a recovery from a fall is the right way of putting this, and not a big jump. It's just a recovery from the fall that we saw over a year ago.
Okay. Good morning, Mr. Vyas. That exactly was going to be my question. If you just move back, zoom out as it were, and then look at the trend, say, over 5 years or thereabouts, then where would you place our recovery? Is it looking good enough to be called a green shoot that can grow?
That would be too early.
Oh.
But if you look at the series over some time, say from 2012 or so, there is a very gradual increase in order book position of companies. So it isn't like there was a fall. It was a little up and down, but if you draw a straight line curve, it looks up. So what happened is, in the last 3 quarters, this kind of fell, and that trend was a bit disturbed. So what I will say is the disturbance seen in the last few quarters has been corrected. So we are coming back possibly to normal things.
Okay. You've been watching these things for decades now, maybe. So does it look like we are in some kind of an inflection point like we were in 2003-04?
I wouldn't say so.
Oh. Okay.
That would be really too early. Number one, these order books are a reflection of just a couple of projects. Bale and Larsen & Toubro are the only 2 ones who have seen these big orders. The other companies have not seen it. It's also just a couple of projects that have given out these orders. More importantly, the capex database still does not show a pickup in new investments. So I think it's too early to say, but at least we can be happy on one count, that the decline that we saw in the recent past seems to be arrested.
Okay, fair enough. In fact, I was coming to that because, if you look at the NHAI's ordering activity as well, so far till date, it's been quite muted with just a total awarding of 1,170 kilometers. Do you expect any major pickup as far as NHAI's ordering activity is concerned in the second half of the fiscal?
See, the government, the ministry are pretty gung-ho on giving out orders faster, but there are practical problems. So if new construction of roads has accelerated, it's because the orders given in the past, much earlier in the UPA 2, were very high. It takes about 5 years for road projects to get completed, and if in the last 2 years we haven't seen a pickup, it will have an impact upon new roads being laid down in the coming couple of years. So I think the intention is right, but the arithmetic does not show that as yet.
Okay, then let's not talk about ordering activity. If you all measure execution, is there an uptick in? Let's first only discuss roads. Is there an uptick?
Not as much as is required. So we require the pace of orders being placed, orders being given out, etc., deals being completed to increase much more than what we see right now. Okay. What we have seen is a completion which is, work of 5 years ago.
Okay. So what about power? Because I heard you mention BHEL as well. You know, while one hears a lot of positive ordering in the road sector, one didn't hear of too much in the power sector. Is that also recovering?
Excepting one project, not much. So there is a problem of excess capacity and a shift towards renewables, which is also getting into trouble because of the pricing problems. So there isn't really any reason to believe, and the data doesn't show it, that there's a pickup in power projects as well. So there is one order which is given out by Telangana, I think, for power, but that's just a one-off.
Okay, so issues like excess capacity and a shift to renewables still persist in the power space. But can you give us an update on, one, the stalled projects, whether stalled projects have reduced, and have we seen an increase as far as a revival of projects is concerned?
So there has been an increase in the revival of projects. That certainly is happening. But projects still do keep getting stalled. I don't have the numbers for this quarter. We'll wait for a couple of weeks more before we get that. But there is a one-off case of a project getting stalled. The good news is that projects do get revived as well.
Okay. Yeah. So speaking of revival, you know, you just alluded to excess capacity in power. Are things moving out of stress? Are they reaching break-even and profitable levels at all in the power sector?
Insofar as the impact of profitability on investments is concerned, I think it's still a long distance. I don't think we are going to see a revival in power investments for a fairly long time, because capacity utilization or plant load factor of thermal plants is still pretty low. It will be really a long time before we see that pick up.
Okay. Okay, that's, we spoke about roads, we spoke about power. Railways, I mean, when the NDA government came in, our big hope was that it will move on both these areas, roads and rail. Do you all collect any, you know, figures on rail projects, and is that looking substantially better?
So I think, so we do collect information on railways as well, but the biggest source of that information is the railway budget. So the budget documents are just around the corner. We should wait for that to come, and then we can comment on railways a lot better.
But so far, is there any improvement in the last 3 years?
Not any significant improvement. It's not big.
Okay, okay. And finally, irrigation, that is largely a state subject. Have you seen an uptick in that sector?
I'm sorry, you'll have to pardon me on that. I don't recall the irrigation numbers, unfortunately. I don't recall the...
No, just directionally, if it is recovering.
Oh, well, since I have not noticed it, it implies that nothing has moved big time enough to catch my attention. That's the only way I can put it.
Okay. So if you had to summarize for us, how long do you think it could take for nascent signs of recovery in the capex cycle? I mean, can we expect to see anything by the end of this year itself, the fiscal year?
So, very, very unlikely. So what will cause a revival in the capex cycle? One, capacity utilization has to improve, which means that consumption demand has to grow up substantially to catch up nearly 10% on capacity. So we have 70% capacity utilization, or even less than that, and this requires to reach up close to 80% before investments will pick up. So that could be one angle, and catching up at 10% capacity is really very difficult. It will not happen in a quarter, not even in 2 quarters. It will take a lot more. The second way of getting the capex cycle back into action is government pump priming the economy. So if the government says we're going to build a lot more, do a lot more, and spend money on that, actually spend money on that, not merely announce things, then that's the second way of doing it. But the government is committed towards fiscal conservative stance. And if that is the case, then I don't think that can also be used.
Well, you know,
so
they promised...
I don't see any lever.
Okay. No, well, they promised off-balance sheet, you know, financing through the NIIF, but we haven't seen that. Just a final question, Mr. Vyas. Do you see, you know, optically, for those of us who cover the economy, we see a lot of construction activity in Mumbai, for instance, because of metros. And we are told that a lot of other cities are also moving in that direction. Is not all that adding up to capex somewhere, infra expansion somewhere?
So it does. I mean, all those metros that make us suffer traffic snarls are all captured. The only problem is that all these do not add up to make it better than what we saw 2-3 years ago.
All right. Fair point, Mr. Vyas. It's a pleasure speaking with you. Thank you very much for joining us and giving us an overall picture. We understand infrastructure in bits and pieces and orders being reported on the exchange or optically what we see.
An absolutely flat day for the markets. Nobody wants to take any big positions ahead of the exit poll results. So let's get a roundup of what's happening in the commodity space. Manisha Gupta joins in with a quick check on all of that. Hi Manisha, good morning. We've seen a bit of a fall in crude lately.
Oh, well, yes, that's because there are two set of fundamentals right now, quite contradicting on that. While you have seen a decline in the US weekly inventories yesterday, and that should have been supportive, but there also are reports from OPEC and non-OPEC allies talking about increasing or carrying on with the strategic partnership that they have in sense of stabilizing, sustaining crude market, and that might go beyond 2018. That is what the markets are reading into. And on the other side, you also have the non-OPEC countries increasing output. So take a look at the US shale output, the Canadian output, Brazil, Kazakhstan, etc. have increased their supplies in the global markets, and that's what pulling the prices down. 0.5% of a decline is what we are seeing in the global markets, and a mirror image is here in the Indian prices as well. The good news, of course, is for the gold and silver bulls, though, with the dollar actually 0.7% down in this week. We have seen very strong gains come back in case of the gold and silver prices. Gold essentially gained 1% overnight, and we are looking at some more follow-through buying of that in the Asian markets, and that has been supportive. 28,000 is back for gold, and the silver prices actually have gained 2% in the overnight markets. The weakness in US dollar, no new cues in sense of the rate hike for 2018-19 from US Fed, and apart from that, the markets also looking at the fact that the prices seem to be bottoming. They have been oversold. We have seen gold prices in the global markets come back all the way from $12.35 to $12.60 per ounce in the Asian markets right now in last 20 hours. So very strong surge is what we are looking at in both of these commodities. No such luck really when it comes to the base metal prices, apart from a couple of them which really have done good. The Chinese trade data has come in, and that shows that the China steel production is the lowest in last 9 months, and the aluminum output has declined to the lowest since Feb 2015. So those are the couple of metals really which are doing well. You have seen nickel and aluminum prices gain up by 0.5% in Shanghai and LME, and that's exactly what we are doing in our markets. Trading strategies, and we have them from Grow Value today, and they have buy calls coming in for all the sectors, starting on with the natural gas, and they expect the prices to gain up to 182 rupees per MMBTU on the higher side. They also have buy calls for the metals and the crude prices. For zinc, they are looking at a target of 208, and for the crude oil prices also, they are recommending a buy with targets of 3,640 for the day today.
Okay, thank you very much for that. Manisha, Anuj, you are the two guys who speak about gold, but I don't. I remember 32,000 gold in 2012. Today, 28,000. I mean, I'm not enamored of this. 37,000 you said for silver, Manisha. I remember it was 45,000 in 2012 and probably 60,000 sometime in 2011 or 10. I don't know.
Oh, yes.
Why are they called precious metals, Manisha?
Dollar-denominated Sensex is still not about 2008 highs. That's a decade.
Now, I don't deal in dollars.
No, that's okay.
I deal in rupees, and gold is not giving me money in rupees.
Look, you can choose. The best part about financial assets is you can choose
the time.
The timeline.
Right. I mean, if you go 20 years, I think.
Yeah, if you go to 2000.
Exactly. So there will be phases, right? I mean,
yes, 2000 was about $250, I remember.
Exactly.
So in rupee terms, it must have been.
I mean, a stock market bull would pick the bottom of the 2008 cycle, and a bear would pick the start of the 2007. So I mean,
okay, we can go on endlessly at this debate, right? We'll take it off camera. For now, let's move on to the all-important Aadhaar linkage case, which has really troubled a lot of us here as well. The government yesterday extended the deadline to link bank accounts to Aadhaar to the 31st of March, thankfully. But the Supreme Court will resume hearing of the Aadhaar case today. Ashpreet Sethi joins us now with all the details. Over to you.
Well, it's a crucial day as far as Supreme Court is concerned. 5 judges will be sitting to hear pleas or challenges as far as the government's move of going ahead and linking Aadhaar to basic issues are concerned, like your bank accounts, mobile numbers and others. In fact, all these pleas have been saying that it infringes on right to privacy. Remember, the Supreme Court had given an order in August saying that right to privacy is a fundamental right, after which these pleas were filed saying that it violates the very right of privacy that has been upheld by the apex court. We'll have to wait and see what happens today, because the main issue that will be discussed is that whether these linkages are done in a proper manner or not, because remember, the government earlier had given an order or a notification saying that if by December 31st your bank accounts are not linked to Aadhaar, they will be made inoperative. However, they have gone ahead and changed this notification and said that there will be no action taken and all these banks' accounts will exist. So we'll have to wait and see what stance will the government take in the Supreme Court in front of the 5 judges, which will be led by the Chief Justice of India.
Oh yes, thank God for that humane change of notification. Thank you very much, Ashpreet. We look forward to the update. But only 50% of the accounts have so far been linked to Aadhaar. Yeah. And I know some struggling older people in my acquaintance, with children abroad or not in this city, and simply not able to manage, linking their accounts. Not just accounts, everything. Even telephone, your SIM cards have to be linked. It's very sad to look at elderly people trying to struggle. So this pushing of the deadline, I think, is most welcome for some sections of the population.
Oh yes, I know some struggling younger people as well who are finding it very hard to meet that deadline. But for the markets overall, absolutely flat, not much happening at all. Just a 50-point gain on the Sensex and the Nifty hanging on to that 10,200 mark.